Hello, welcome to today's Market Matters video update. I'm Harry Watt, joined by James Garish. It is April the 9th today. We're going to run through the first quarter of equities and portfolio performance, James, and in particular focusing on March, which rounded out a really good start to 2024 for equities more broadly. It's a pretty strong rally through that period. So running through the 5 portfolios we've got on offer at Market Matters, you can check them out at marketmatters.com.au. The active growth portfolio, James, how did that go in March and against the backdrop of where markets were performing in the month?
Yeah, it was a good start to the calendar 2024. So we came off the back of a good calendar 23, and now we've got the first quarter in the books. I'm going to focus on March here on these numbers. So active growth portfolio up 5.82% for the month, well and truly above its benchmark, which is the ASX 200 accumulation index. That was up 3.27%. So all going well for the month of March. Quarterly, it's going well. And in all key timeframes, it's outperforming its benchmark. So on a one-year view, it's up 20.96%, so call it 21%, versus the index up 14.45%, so about 6.5% above the benchmark. I'll just quickly call out a couple of stocks that did really well for us. Evolution Mining, EVN, gold copper company, they've had some operational issues. That they raised capital to make a good acquisition that we think, but they're really enjoying the gold price and copper price tailwind. So that did really well for us. Goodman Group in the property space, been a core holding for a while. It's been top of the leaderboard in our portfolio the last few months, continued on in March. And Sandfire, SFR, benefiting from copper price tailwind. So all of those 3 stocks we still hold. They were the key drivers of performance. But if you look more broadly, there were only 2 stocks in the 20 in that portfolio that were down in the month. So really strong performance, Harry, for the active growth portfolio. And April has started nicely as well.
The active income portfolio, James, it's our second longest portfolio that we've run at Market Matters. Very different from the active growth portfolio, but it still had a pretty good month in March, from what I've seen.
Yeah, it combines equities, fixed income, property, more defensive. It's got a target of consistent income with lower volatility than the market. It certainly achieved that. In March, it was up 1.94%, 1.94%, I should say, versus the benchmark, which is the RBA cash plus RBA cash plus 4%. So it was about 1.24% above benchmark. 1 year view, it's up 8.65%, 0.5% above its benchmark. Inception, it's about 3% annually above its benchmark. So a couple of key highlights for that. I mentioned property stocks doing really well in March. The property sector, the real estate sector, was up 9.7%. Best sector on the ASX in March. We didn't own Goodman because it doesn't pay enough yield to be in that portfolio, but we own Dexus and Centuria, so DXS and CNI, both up around 7 to 8% for the month. So those 2 stocks drove the performance. But again, only 2 positions actually fell in the month of March. So broad-based optimism throughout, Harry.
All right, sticking locally, the emerging companies portfolio. It's an area of the market that we've been focused on at Market Matters, and as seemingly a lot of market commentary suggests that this smaller end of the market is going to outperform, and it's started to see that in March. How did the emerging companies portfolio?
Yeah, it has. If we look at the benchmark of that portfolio, it was up 4.79%. So that's a small odds accumulation index in March. So smalls outperform large caps. And it speaks to the broadening nature of the rally that's starting to play out. So rewind the tape to December quarter. The market was driven by tech and tech-related AI enthusiasm and the like. So that's why we saw a big outperformance in international equities, the US in particular, given their composition towards technology. But we're starting to see it over in the US. The Russell 2000 starting to outperform, and we're starting to see it here in Australia. So we think that's a theme that's got legs. As this rally broadens, it should encapsulate the smaller companies, and we're starting to see that take place. So the emerging companies portfolio up 4.25 in March, about 50 basis points below the index, but it's largely keeping pace. On a 1 year view, it's up 14.99% versus the index up 13.83, so about 1% above its benchmark. So we like the outlook, the improving outlook for emerging companies. They've been big underperformers over the last probably 2 years as rates have risen. Now rates are coming back. We expect that theme to continue, and we expect the sort of risk on buy permeating through markets to filter down into the emerging company space, Harry.
One area of the market, well, global markets rather, have outperformed local markets for quite some time. It wasn't the case in March, James, but we do run an international equities portfolio you can track. How did that go in March?
Yeah, so MSCI World Index in Aussie dollar terms was up 3.17%. So you would compare that to the ASX 200, which was up 3.27%. So Aussie stocks are benefiting from that broadening of the market rally into more industrial focused sectors, financials, commodities even, are really starting to shine. So our portfolio, international equities portfolio, if you're interested in international equities, jump on the Market Matters website. There's a direct international equities portfolio on there. You can dig into the names. You can do a bit of research around broker calls, consensus, forecast, earnings. There's a huge number of stocks out there that are not listed in Australia. We're such a small area of the world. So I'd encourage subscribers to go and look at the international equities portfolio. It was up 3.74% for the month. So about 0.5% above its benchmark, and is up 21.25% for the last 12 months. It is about 7% below its benchmark, I'll highlight. That's around composition of portfolio. But if I look from inception, it's up about 4.5% above its benchmark per annum. So that's a good portfolio. We've got some interesting holdings in it. So Albemarle was one that we spoke of in recent Market Matters reports. It's a diversified lithium company that we've recently bought in that portfolio. That looks good to me. We've also got lithium in other portfolios starting to improve. First Solar, FSLR, is one that we've held for a while that's on the up. And I'd highlight HCA Healthcare is one that's done really well for us as well, thinking about trimming that position. So all in all, international equities have done well, Harry.
The newest portfolio in the Market Matters suite is the core ETF portfolio. We're coming up to nearing 12 months worth of performance there. It's a very different sort of setup to our portfolios. James, give us a run through of how that went through March and what that portfolio is more about.
Yeah, so just to give you an understanding of how Market Matters has evolved over time. So we've been around 10 years. We've gradually rolled out additional portfolios as and when the demand has been there, and as and when we've got the capability to do so successfully. So, the growth portfolio came to be in 2016. We launched the income portfolio in 17, the international equities in 19, the emerging companies in 20, just before COVID. That was good timing there. And we have launched the ETF portfolio in April of 2023. So it's coming up to 12 months worth of performance track record. It's up 10.68% since inception, which is about 4% above its benchmark. The RBA cash plus 3% is its benchmark for this diversified portfolio. And in the month of March, it was up 3.18%, which is about 2.5% above its benchmark. So if you're looking for a more passive ETF-focused portfolio, diversified asset allocation, then the ETF portfolio could be one worth watching on the Market Matters website under the core ETF tag. So go and check that one out. So a reasonable performance, no doubt, in March for that portfolio, Harry.
All right, that's a wrap of performance, the 5 portfolios in the Market Matters suite. Just before you go, James, I just want to see some thoughts on where markets are heading. So it's start of April. It's been a lot more volatile than we've seen of late. We've seen interest rate expectations really swing around a little bit. We've seen commodity prices continue to rally, and a lot of them start to rebound. And iron ore in particular is what I've pulled out. This morning's report touched on that. What's changed in the last few weeks, and what's changed heading into the last quarter of FY24, James?
Yeah, so it's all been on interest rate expectations or changes around that. So obviously economic data has been ebbing and flowing, but overall it's probably been more resilient than the market had anticipated. That's obviously good for company earnings, and we've seen that in recent reporting periods. But from a macroeconomic standpoint and a monetary policy standpoint, there's been a change in how the market's expecting central banks to change interest rates. So December of 23, there was 6 interest rate cuts priced into the US market. We're now down to 3 cuts a couple of weeks ago, and we're now down to 2 cuts in terms of interest rate expectations. So that just that movement around market expectations on rates has probably been the driver. The other one you'd call out is commodities. So I think this is the backdrop for commodities is improving. I think the sentiment towards China is improving. We're starting to see that filter through into some of the commodity companies on the ASX. We've got a big, we're betting on commodities improving from here. We've got an overweight stance in our active growth portfolio. And so far in April, it's been working for us. We expect that'll continue. That's an area of the market where we're really looking to position portfolios towards. Stock pickers market, obviously the cliche, but I think as the macroeconomic environment evolves, then you've got to be a stock picker. You've got to be conscious of being in the right sectors where a top-down approach meets bottom-up stock analysis, and that's how we approach markets here at Market Matters, and it's certainly been delivering strong performance over the long term. So we'll continue with that approach, and we think it'll work into the back end of this year, 2025 and beyond, Harry.
All right, I'd implore you to all go check out the Market Matters portfolios published on marketmatters.com.au. There's 5 of them there. They've all got a number of holdings underneath them. And within those holdings, there's plenty of analysis there from us and from our providers as well. So plenty to go and check out on the website. But for now, thanks for joining us.